Today, we're looking at the story of GK Energy, a company that's right at the heart of a huge transformation happening on India's farmlands. It's a fascinating story, one that's all about explosive growth, big government policies, and some seriously high stakes. First, let's just try to get our heads around the size of the problem. We're not talking about some small niche issue. We are talking about 27 million farmers across India who desperately need a reliable way to power their water pumps. I mean, for them, consistent energy is everything. It's the line between a great harvest and a total loss.
And for decades, the options have been, well, pretty terrible. On one hand, you've got diesel pumps. They're super expensive to run, they pollute like crazy, and they are a nightmare to maintain. On the other hand, there's the electric grid, which, as you might know, can be incredibly unreliable in rural areas. For a farmer, that kind of erratic power is a gamble they just can't afford to take. So, what's the solution?
Well, this is where the Indian government steps onto the scene with a massive, nationwide push for solar power. And this isn't just a suggestion, it's a heavily funded national priority. It's designed to solve this farmer's dilemma once and for all. The engine driving this whole thing is a policy called the PM Kusum scheme. And its main feature is actually pretty simple, but incredibly powerful. The government offers up huge subsidies. We're talking up to 60% of the cost, making the switch to solar an absolute no-brainer for farmers. And the scale of this, it is just staggering. We are talking about a plan to install nearly 5 million new solar pumps. This isn't just a policy, it's the creation of an enormous new market practically overnight. This is the giant wave that a lot of companies are now trying to ride. And that brings us directly to GK Energy. This is the company that put itself in the perfect position to ride this government-fueled wave, with the goal of turning a massive public policy into serious private profit. So who are they exactly? To put it simply, GK Energy has become the biggest company focused purely on installing these subsidized solar pumps. When state governments need someone to execute the PMKSUM scheme, GK Energy is right at the top of their call list. They operate on what's known as an EPC business model. Now, that just stands for engineering, procurement, and construction. All it really means is that they handle everything, the whole shebang, from designing the system to installing it and even maintaining it. It's a complete all-in-one service.
So, you can probably guess what happens next. When you're the leader in a market that is just exploding, your financial performance is going to look like an absolute rocket ship. And trust me, the numbers here are genuinely eye-popping. Let's just start with this one headline. Number 166%. That's how much their revenue grew in a single year. I mean, that kind of growth is almost unheard of for a company at this scale. And just look at this jump on the chart. In one single fiscal year, their revenue shot up from 411 crore rupees to almost 1,100 crore. They more than doubled their entire business in just 12 months. It's incredible. And their efficiency is just as impressive. A key metric, return on equity, was over 100%. To put that in really simple terms, for every single rupee of shareholder money that was in the business, they generated more than a rupee in profit. That level of efficiency is just stunning. And it wasn't a fluke. All the other key metrics tell the exact same story. You've got a return on capital employed of 74% and a really healthy profit margin over 18%. So this isn't just growth, it's highly profitable growth. So far, the story sounds pretty perfect, right? Well, not so fast.
This is where the story gets a lot more complicated. Because hiding just beneath the surface of this incredible growth story, there are some equally significant risks lurking. It's time for a reality check.
So that brings us to this central puzzle. The company is posting record profits, but the cash, well, it's not showing up in their bank account. So the billion-dollar question is, where did all the cash go?
Okay, so here's how this cash crunch works. JK Energy installs a pump, and they send the bill to the government. Then they wait. On average, they wait 85 days to get paid. But here's the kicker. They have to pay their own suppliers in just 39 days. You see the problem? Money is flowing out way faster than it's coming in.
And this is the brutal result. Even though they made over 133 crore in profit, the company actually had a negative operating cash flow of nearly 100 crore.
They were burning through cash even while being incredibly profitable on paper, and that is their single biggest vulnerability.
And here's another major red flag. A staggering 99% of their revenue comes from these government schemes. They are completely and utterly dependent on a single type of customer. If that government policy changes, or if payments get delayed even a little bit further, their entire business model is at risk.
And the list of threats doesn't stop there. Their whole business model hinges on these government subsidies continuing. The competition is fierce since contracts often go to the lowest bidder, which puts a ton of pressure on their profit margins. And, of course, their whole operation depends on a stable global supply chain for solar panels and other parts, which can be pretty unpredictable.
So what does this all mean? We have this story of unbelievable growth on one side and these almost existential risks on the other. It is the classic definition of a high-risk, high-reward situation. Let's try to summarize the final verdict.
This really sums up the whole picture perfectly. On the one hand, you have these powerful strengths. They're the market leader in a period of absolutely explosive growth. But on the other, you have these critical weaknesses, like that terrible cash flow and being totally reliant on one customer. The opportunity is a huge growing market, but the threat of a simple policy change just hangs over everything.
So you can really lay out two completely opposing arguments here. The bull case, the optimistic view, is simple. They're a leader with great margins, riding a massive wave of government support. But the bear case, the pessimistic view, is just as compelling. The company is basically one policy change or one payment crisis away from being in serious trouble.
And that really is the bottom line, and it's captured perfectly by this quote from an investment analysis report. GK Energy is the definition of a high-risk, high-reward opportunity in a booming sector. Which leaves us with the final, crucial question. Is this company a true 10x growth opportunity, set to dominate a vital new industry for years to come? Or is it more of a financial mirage, built on a foundation of government policy that could vanish just as quickly as it appeared? The answer is going to determine the future for millions of farmers and for billions in investment.